we have started this session basically for the entrepreneurs, those who are actually entering into their entrepreneurship journey. So this session is all about like how the funding industry is going post-COVID basically. So we have certain experts out there, and we have associated ourselves with Voila, especially for this session. And this session has been sponsored by Vedam Agrotech. Vedam Agrotech is an aggregator in agri-tech and processed food industry. So Anjali Bawa would be the moderator for the today, and you will be having like all our panelists as the guest. Over to you, Anjali.
Thank you, Abhishek, for the introduction. It is our pleasure to be associated with Accelarize as event partners. Voila.Expert is a tech-enabled expert network platform. We aim to connect startups and SMBs to vetted consultants across all business categories. Based on the mobile app solution, we aim to make expertise accessible to all. Hello and welcome to everyone to the most awaited panel discussion on startup funding post-COVID era. I, Anjali Bawa, will be your moderator for the day. Did you know that the Indian startups collectively raised $7.8 billion in the first 4 months of 2021, which is almost 70% of the overall corpus of $12.1 billion in the entire 2020? Despite the severe effect of second wave across all the macroeconomic activities of the country, investors continue to put money in the emerging startups. Why is that? With uncertainty looming everywhere, this makes the issue even more important to discuss. And what better than the experts of the fundraising world? Who have been there, done that. So without further ado, please welcome our esteemed panelists of the day, starting with Ms. Deeksha Ahuja, founder and CEO of Encubay Angel Networks, mentor at One Valley, and the founder of women-led projects, Collaborate Her and Cedarwood Teachers Networks. Mr. Krishnakumar Devnally, founder and director at mPower Solutions, a consultant to MSMEs, mentor, advisor, and an investor to startups for over 30 years of professional experience. Joining directly from Israel, Mr. Mikulitski, strategic advisor for startups and venture capital, Kataki Ventures, and founder of Mikulitski Critical Consulting. Last but not the least, Ms. Sonal Agarwal Bali, an angel investor, founder at Diligent Consulting and co-founder at Meteor Ventures, involved in nurturing, fundraising, and mentoring multiple sector startups for over 20 years. A very, very warm welcome to you all. Thank you for taking out the time today, and we hope that we all leave the session with a lot of clarity on startup ecosystem, fundraising, and the impact of COVID-19 on the same. To all the audience members, feel free to post your questions on the chat box. If you have joined from desktop, that will be on the right side of your screen. And if you have joined via mobile, then it will be at the bottom of your screen. We will pick and choose the questions and ask them to the panelists after the panel discussion, that is at the end of the last 15 minutes. Make sure that your questions are brief and write the name of a panelist you want the questions to be directed to. The session is divided into 4 parts. Number 1, profitability versus scalability. Number 2, valuation risk. Number 3, sectors to look out for in 2021 and 22. Number 4, sustainability of early age startups in an uncertain time. In the next 60 minutes, we hope you give your full attention here and make the most of the session out of here. And now, cherry on the top. There is an exclusive offer by Voila and Accelarize, which will be announced by the end of the session. For this, you require to fill a form, which will be shared on the chat in the middle of the session. So keep an eye out. So let's start the session, right? The first segment, profitability versus scalability. Let me start with you, Lev. What are the indicators of scaling up a business and the importance of being profitable for investment in a startup?
Okay, Anjali, thank you very much for this warm intro. And just before I touch on the subject, a few words just sharpen my presence here. So as was earlier presented, I'm both an entrepreneur, an advisor to startups and venture capital firms, and I also represent and partnering with a few. So actually, I'm on a daily basis practicing all the challenges in the range between entrepreneurship and capital. So I'm into it 24/7. Now let's discuss the topic: profitability versus scalability. On the one hand, two concepts are so interrelated, right? On the other, they are very, very different. And of course, we can discuss it. I mean, those like few minutes will not satisfy all of us, because those are deep topics. But I think there will be people who rightly claim that each such concept is suitable for different stages of a company and different strategic challenges of a company, and these will eventually dictate the needs of which one to adopt. Generally speaking, that is correct. But today, and you need to understand, this is not very different from any other period. Every CEO should ask himself, how can I create the conditions that will ensure me sustainable growth, which minimizes the impact of COVID-like events? Because today it is COVID. Tomorrow, it could be another competitor who enters your market and actually eliminates your existence or your relevance. So it's an issue on its own. Now, the simple is quite simple. Its application is less, but at least the answer is simple. And in this context, there's a nice quote that I personally like. Revenue is vanity, profit is sanity, but cash is king. Yes, cash is literally a mother of 99% of the business-related problems and a #1 solution. Of course, the problems come before you run out of cash, and being with no cash flow is a consequences. But I'm sure you see my point. Simply put, cash flow is breathable air. When there's no cash, business dies. Now, it doesn't matter if it's a deep tech firm on its first early stage R&D kind of challenges, or it's a bakery. With no cash, you cannot run a business. But there's much more, and that brings us today to the conduct of companies that are having hard time raising money in general, and today in post or still COVID in particular. So 3 things I think our audience should keep in their mind. First of all, profitability. Okay, and you can be with cash but not being profitable. Okay, you can raise tons of millions of dollars and having this cash, but this is not what I'm speaking about. I'm speaking about being with a cash flow out of profitable management. And so profitability is the #1 sign and a #1 indicator of a healthy company and a healthy management. When you raise money, you need to lower the perceived risk of your investors. Smart investors don't want to fill debt holes. They want to invest into growth with minimum risk. And that brings me to a situation I personally experienced, I think a month and a half ago. I was asked one of the VC firms I'm affiliated with to scout for a very, very precise potential investment. And I did it through a friend of mine who is running a great Israeli agricultural startup. But I'm not aware of his day-to-day management. So I reached out to him and I said, look, I have an investor, and you're filling all the check boxes with, and I think there's a good chance that he will invest in your kind of company. But he was looking another indicator he was looking for is to be EBITDA positive, so be operationally profitable. Okay, and this a friend of mine, CEO of this company, said, you are looking for a startup, and for startup who is profitable. I'm not, and I didn't, I'm not aware of such of startups. So okay, he's not profitable, and he's like EBITDA very, very, very negative. Okay, but yes, he should be profitable, as other companies who I am aware about their managerial current situations, and they are profitable. Today, more and more investors are looking to invest in profitable firms, even if they are at the very, very early stage of their growth. Number two, profitability is the number one sign of an actual ability to scale. Companies are constantly under the stress of trying to raise money, and this money is needed both to the day-to-day management and to their ability to fulfill their growth goals. But when you have money in your bank account, okay, preferably out of a profitable business, you can simply use this money as a working capital. Okay, so you don't need to run after your tail in order to seek for investment. It's a challenging work to raise capital today, especially. So if you're profitable, you can simply put this money into your scalability challenges. The last point for this short discussion is that profitability is the number one tool to manage uncertainty. You need to pivot, you need to exercise R&D challenge, you need to bring capital in some creative way. Today there are plenty ways of raising capital. You have R&D, IPOs, like early stage companies doing IPOs, SPACs, different crowdfunding concept, all require capital to bring more capital. Okay, this is not a surprise. So instead of deepening the hole where the company is, it can simply leverage the capital which is already available. So just to wrap it, I think today, when you think about, okay, how do I scale? How can I potentially scale? How do I create this perception of a great company to invest in? I think companies today should first crack the managerial excellence. Okay, they should be first profitable, even if they are small. Okay, if you manage today to crack this profitability issue, you'll be able to scale sustainably and reflecting, I think, the real worth for your stakeholders. So to make it sure, I think you should be profitable first, and then to see how you scale.
Got it. That makes sense. So, I would like to bring back to your first three lines that you said. Revenue is sanity, cash is king, right? And there's one more.
No. Yeah. No. Revenue profitability is sanity. Yes.
Profitability is sanity and cash is king.
Yeah, and cash is king. So yes.
So now we've got that one line.
You cannot be cashless with your business. Yeah.
Of course. So now we've got these two lines. I'd like to ask you, krishnakumar, here that you have also had a vast experience of dealing with early age startup. What is your take on this?
First of all, I would like to thank Anjali and Abhishek for giving this wonderful opportunity here to interact and interact with the startup founders and entrepreneurs. Secondly, an opportunity to share my views on the ecosystem and current landscape. Coming to profitability and scalability, I feel they are the two sides of the same coin. So when I look at it, it's like both are important for success. But then, as Lev said, when to give importance to profitability and when to give importance to scalability is the judgment that each, I think, startup founder has to make. And as Lev rightly said, that unless you are profitable, you can't think of doing anything else. Scalability is just expanding your horizon, whether you add new product line or you add territory to your existing business. But then scalability comes next to being profitable, and profitable is like having cash. So absolutely. So I think profitability should be the first focus for any early stage startup. As Anjali, you said that I always deal with the early stage startups, so they are always struggling with resources, and that's where the cash and the importance of cash comes in. So first focus on profitability. Once you have profits and cash in your bank account, I think raising money also will be easier going ahead. So that's my take on this a particular aspect of the business. Thank you, Anjali.
Got it. So profitability first and then scalability, and then eventually you will have that cash flow to move ahead. So now I think we go to another segment. We know a bit about profitability and scalability. Let's move on to the valuation aspect of a startup. Starting with you, Sonal, you have been a core member in helping many startups to raise funds. What are the most preferred methods of calculating valuation for investors?
Uh, 1 second, I think I lost. Hey, hi Anjali, and thanks much for this opportunity. I'm really glad to share the dais with the industry stalwarts over here. So thank you so much. Yes, valuation, I think, is a buzzword in the startup ecosystem. So fundraising and valuation, they are like partners. You cannot live without the other. So if you are going for a fundraise, valuation is the thing that you should know. And if you don't know your valuation, then probably you will end up not raising funds. So it's like, I say the partners or the married partners, I would say, is what is the best, definition for valuation and fundraising. Coming to the formula. So basically for early stage startups, what I think is that there's no specific formula for a fundraising or a valuation, what kind of equity you should be diluting. So it's more so as a guesstimate in the early stages, right? But then obviously as you evolve as a startup, then you go into various formulas. There's a Burkus method, there's a VC method, then there's a scorecard method. So a founder needs to understand how these methods work and how does it look like from the VC's lens. So you need to actually evaluate yourself, or you want to value yourself with the kind of VC you are going to be meeting. And the best thing to actually understand is having your financial projections or your business plan right. If you have your business plan right, then there are either you yourself or the financial experts in the area will be able to tell you what kind of valuation you should go with, with the startups. So as I said, when you are in early stage, there is no formula as such. It all depends upon what kind of money you want to raise and what is the equity that you want to dilute. So it's mostly when you sit across the table with the investors, there are a round of negotiations, and then you come at a fair valuation. I can give you a couple of examples, like in a very early stage or an incubation stage, 3 to 5 crores is the valuation which typically falls in that kind of an ambit. If you are a mid stage or an early stage, just entering your revenue cycles, then you can say 8 to 12 crores is what you can value yourself. And depending upon what you're raising, you need to dilute your equity accordingly. And obviously, when you go into Series A, Series B, Series C, there are established method of valuations. You have DCF, you have NAV method, you have residual income method, a lot of methods that come into play. And the founders need to understand basically all these methods and the pre-money valuation, the post-money valuation. These concepts are very important because sometimes what happens, people get confused. Are they quoting a pre-money or a post-money valuation? And that's where, it becomes tricky, and they end up diluting a wrong, number percentage. So guesstimate is the first thing that I would say for an early stage startup. And then there is a bracket which the founders should understand. And then there are backup methods through which valuation certificates can be procured. And for a growth stage startups, there are very established methods, like I said, DCF methods and all those, which you can go with the valuation.
Got it. So essentially, it starts with guesstimate, where you come to a part of pre-money valuation,
Yes.
and then you need a certain expertise and expert advice, where you can decide on those parameters that what kind of valuation analysis that you need to intake.
Correct.
Great.
Rightly put
Great.
in. Yeah.
Anjali, can I just add something here? I think
Yes,
Sonal
absolutely.
given a fabulous answer, right? One of the other things that you might want to consider is also what type of company are you raising for, right?
Yes.
Is it a SaaS platform? Is it an e-commerce platform? Is it, a service-based platform? So you really need to figure, because for each of these industries, there is a certain set level of valuations, right? So like SaaS platforms by default get a higher valuation, right? Because those are proven models, more scalable. Vis-a-vis probably, maybe another newer type of sector that you're kind of going in, or even like today, the sectors like travel and hospitality, which are unfortunately affected, those sectors will not see a very high kind of a valuation just because of market dynamics and instability. So just wanted to kind of add that there. But Sonal, brilliant answer.
Thanks so much,
Yes.
Deeksha.
Absolutely. In fact, I was about to ask you Deeksha. Krishnakumar, can you please unmute? Might be little. Yes. So, I was actually about to come to you and ask you that, since you have worked in different set of sectors, but also I want to add one more thing here. You've also built an entire ecosystem of women founders and investors. Do you think that gender also plays an important role when it comes to analyzing valuation, especially in these unprecedented times?
The hard truth is it does. And there's enough data to back this. Last year, VC funding to female-led or co-founded ventures significantly dropped across, and this is even economies like the US, right, where you wouldn't expect stuff like this to happen. And this kind of stems for the fact that investors want to put money into sectors or people that they trust. Unfortunately, for a long time, no one has spoken about the fact that very little money goes to female-funded startups. And now, with the likes of Bumble and Honest Company, you're actually seeing that some of these companies run by women are not only giving exits, but higher ROIs, employees are more happier, right? So now these things are coming out. So till now, yes, women are at a disadvantage. Because there have not been too many success stories in the past. But I'm an optimist, and the next decade is literally for female founders. So you can actually see the shift now. And I speak to so many VCs who come and tell me, please let us know if we can co-invest with you, because they've realized that they've missed out investing in female-funded startups in their portfolio. And not having that is, posing problems when they go to fundraise from, their LPs and stuff. So they're at a disadvantage, but trust me, the landscape is changing for the better very, very quickly.
That's amazing. In fact, I can actually vouch on this. We have two power ladies on our panel here.
You too, Anjali.
Absolutely.
Thank you. That means so much. And anything you would want to add here, Sonal, since you have also gone through the same process?
Yeah. So, of course, I would completely agree with what Deeksha had said, that yes, the historical days or the historical startup ecosystem has not seen many female co-founders or founder-led ventures get a lot of buzz. But yeah, I think Bumble has been a great example. And the recent one is there. I just forgot that lady who got clicked herself in a pink suit. Deeksha, do you remember?
Yes. Vimeo.
I think that's another very sophisticated and very good example of a sole founder. I've seen Cash Karo also, with Swati doing a lot of, has created a good ecosystem. Whereas she's got a lot of contemporaries and competition in the place. So I'm sure, as Deeksha also pointed out, yes, the next decade has to be something where the female-led co-founders or the female co-founder ventures will take much stride. I think that should be a showstopper in the next decade. And Anjali, will start with you.
Thank you so much. I am
Actually,
sure.
there is actually something I would like to add as a. I think given this context of COVID or post-COVID, or we are still in the COVID, I think a lot of women proved to be great leaders. I mean, let's start from the government level leadership from New Zealand, Croatia, and a few other countries. Those countries were managed precisely, and they were led by women, leaders, managers. And today, going to the first topic of profitability versus scalability, I think it's a matter of internal culture. Going and actually rushing after this excellence of management, because I'm sorry of being jumping. I just seen a question somebody posted, but I think it's very, very interesting. Somebody just asked, how is that investors are still investing in companies which are basically losing money? And this is fascinating because we can now actually, there's a rush towards specs and IPOs kind of, funding. A lot of companies are going public. Now, before they go public, you basically don't know nothing about them. But once they are go public, you know everything. And if you'll see the statistics, you'll see that actually, I think, and don't catch me here on the exact number, but something like 92, maybe 93% of all companies going public, they're a losing company. I mean, just 6, maybe 7%, they're profitable companies, okay? And they're still going public and they're managed. But this is not necessarily right, okay? Because let's check, average, let's go to the bakery business. Okay, bakery business, which is losing money, will not last for long. Okay, so they'll be able to take some debt from here and for that, but it will not last for long. This is not a right behavior, manager behavior. So when investors still invest in this kind of companies, okay, this is a certain game that we are all playing, but this is not necessarily the right thing. And going back to this gender issue, I think women, generally speaking, without any particular context, they are great managers. They're very, very sensitive from this place of being a woman, but still they're very brave to take bold actions and very, very smart actions. And today, I think every team should have, if not a co-founder, so at least, a high executive, a women high executive on its team who is responsible for the strategic management of the company. It's proven to be very, very strong, and companies will benefit from having more women on their teams.
Absolutely, and I think we all
just
echo the
add
thought.
a small thing over here, Anjali. Yes. It's very interesting because, as Lev said, there are some inborn qualities in a woman which actually makes her a very good businesswoman, right? So I think all of us manages our household budgets, right? Being a finance person, I can really understand that that's something which is a natural inculcation in a woman, right? So when it goes from the kitchen or a household to a business or a startup, that natural attribute gets into the entire ecosystem, and she's able to kind of sustain or able to manage the funds more appropriately. She knows how to kind of allocate the funds and at the same time save them also, right, for future exigencies or anything that comes up, like a COVID scenario, whatever we're talking about. So I think that very attribute excites me a lot. And I really think, apart from the other things like coaching, leadership, mentoring, all these things are there. But this is a very, very important natural attribute in a woman, which can actually make a woman a very good businesswoman or a founder, successful businesswoman.
Absolutely. I think the inherent nature of a woman makes her very different, whether it comes to thinking, whether it comes to managing, and also leading eventually. I think very well said to, sorry, Krishna Kumar, you were trying. Yeah.
Two points I would like to make. One regarding the gender issue. I think 2 of the 5 startups that were funded, that have been mentored by me, have been, I think, founded by women entrepreneurs. So
Wow.
I think 2/5 is the ratio of my success story, I would say. And as far as valuation goes, I think I would like to throw caution to the wind. Because many a times I have seen founders running after the valuation, and that's not the right approach. You can't have, you have only one Paytm, I would say, right? You can't have many Paytms, right? So you just, when you are at the early stage startup, the focus, as Lev said, profitability should be the first focus and not the valuation. If you take care of your fundamentals, that is profitability and your cash flow and your scalability, I think you are automatically taking care of the valuation. So you need not worry as early stage startup anything about valuation. As Sonal said, there is no formula. But if your basics are if your foundation is very strong, your basic fundamentals are really great, you need not worry about valuation. There will be, in fact, investors lining up to put in money in your startup rather than you chasing the investor. So thank you very much for that opportunity. Yeah.
Yes, thank you, Krishna Kumar. In fact, you have summarized the entire conversation very well. And in this nutshell, that we have gotten a very clarity that how do you determine the valuation and how important it will be in the later stages. So I think let's move on to our next segment, which is my favorite segment, is that what are the top 3 sectors that you look out for in 2021 and 22? I'll start with you, Krishna Kumar, that what do you think are these 3?
I won't per se zero on the 3 top sectors, but I will give an indication as to where the things are heading. Because one, COVID no doubt has affected businesses all across, and the major hit has come certainly on the startup space, because startups anyway are struggling for the resources, and with a lot of challenges coming for the startups, I think COVID has hit badly in that space. But having said that, COVID has also thrown open many other sectors which were otherwise not known in India. So like, for example, healthcare or health sector, health tech companies, I would say many innovations have happened in last 1 year in India. One of the things is, like, I would say the PPE kit story is a great example. Second is the mobile ventilators. When the ventilators were short in short supply, mainly short supply because many of the equipments or medical equipment or medical products have to be imported, and because of COVID the supply was not coming, so India had to go for indigenization. So I think whatever, I think healthcare has become a very lucrative option for startups. Secondly, coming to the consumer side, if you look at COVID, all of us now give importance to our health, which otherwise we were not, right? In India, at least, I have seen people going for, junk food. And nowadays, people only think about healthy style of living because they have learned hard way that how important is the health. So anything to do with health, hygiene, fitness, which naturally the consumers are now aware of, I think somebody doing something on that front is going to really, get the benefit out of this sector. Secondly, I would say, being a technology person myself, I think anything which is technology driven, any products or innovation in the technology space, like I would say robotics, IoT, AI, artificial intelligence, AR, VR, then anything related to mobile and online space. So anything related to technology is going to be a favorite sector for any investor, or for that matter, even customers nowadays, because of COVID, has got habituated with using technology. Otherwise, many of people I know who were afraid of using technology now have started using technology. So I think anything to do with any tech startup, that's the second thing that I think will do well in whatever this situation, as well as post COVID. In fact, technology will always do better in any situation. And the third thing, I think a lot of things have gone online. So anything innovation coming in logistics space, to cut down on the delivery lines, and maintaining the quality of the product, maintaining the I would say the perishable products delivery online becomes a challenge. So anything in that space. So I would say that logistics is also one area I think people should look at. So I think these are the three picks if I want to make in terms of the trending sectors post COVID.
Very interesting. I think it's basically healthcare, consumer side, technology, and the logistics. That's the four sectors that we need to look out for in 21 and 22. In fact, I would like to open this question to all the other panelists. Do you think there are any other sectors besides these which we need to look out for in 21 and 22?
Can I take this, Anjali?
Yeah, Sonal.
I think
yes,
fintech
please.
is something which I really believe will be a great leader in terms of getting investments or doing very good, because it's a very very underutilized sector in India. Though we have a Paytm, which is the major chunk in fintech. Fintech is like Paytm. There are no more innovations that has been done, and there must be around thousands of fintech companies, but they are doing very small work. So we really need to kind of boost them up. All those companies which are really solving some problem, because what I think is that in the next decade or so, the entire banking is going to be disrupted, and it needs to be disrupted. We need to understand, or we need to look from another lens altogether as to how this banking industry will work, because what is happening in banking is not up to the mark, right? So I think it needs disruption, and there will be, apart from the healthcare, edtech companies, or whatever companies are suiting to the environment today, which is COVID or any kind of such environment. I think fintech is something which should come up in the next decade or so.
Absolutely, I agree. It's one of the most booming sectors that we heard about in the last 2 years, and I'm seeing that there's a lot of potential that will be coming afterwards as well. Anything else you would like to contribute here, Lev, Deeksha, the industries you think which we should look out for?
Deeksha, go ahead.
No, Lev, go ahead. I have a slightly different opinion, please.
No problem, no problem. I will add some, but I will not. Actually, I will not go too far. I think with all the advancement in the healthcare segment, with this COVID, the entire humanity got caught, not ready. So the entire segment of healthcare, biotech, pharma, health tech, even consumer wellness segment, I think will drive more attention, and there's a lot of room for advancement, and this will be big, much bigger than we know today. For the other point, I very agree with Sonal, but it's not just the banking. I mean, fintech will bloom. We're just at the very beginning, but it's not just banking. I think what is happening in the insurance segment. I mean, the entire insurance segment should go to a revolution, because if we have some emotionally speaking, some bad feeling towards banking, so let's all of us think for a moment about what we think about insurance companies. Okay, so those are very big giants that should go and be and be actually rebuilt in a very new way. The cost of money should go down, okay, for all of us, for all the people. So yes, if I would bet tomorrow on the two, broadly speaking, segments that will be much bigger than we know today, it's the entire healthcare biotech segment, and here we have a lot of sub segments that will grow, and of course fintech, yes, for sure.
Great. So anything you would like to add? Yeah,
I just wanted to make like a quick point. I think everyone, I think Krishna, Sonal, Lev, they've all made very valid points. But at the end of the day, I also want to let all the entrepreneurs know that just because a sector is trending or is going to boom, that's not the reason for you to start. I've seen that, and that happened with EdTech last year. And I can say this because I launched an EdTech venture 9 years back in India when EdTech was not even a term coin. And that time, we've seen the entire evolution. And then like last year when COVID hit, any and every company who thought that they could, have a free Zoom subscription and get teachers, everyone was launching those ventures and, not understanding the dynamics of EdTech are more in the ed rather than the tech. So, that's one point that I want to make. And I think secondly, more holistically, I think COVID, as a larger situation has really affected the way we live, eat, work, travel, communicate, right? I think that is a very important point. So today, if you're an entrepreneur and you're able to adapt to the growing needs or the changing needs of consumers today in each of these ways, you definitely have a winning strategy. But think hard about this and try to see what is it that you can add value to, whether in terms of expertise or prior experience or maybe some great technology and IP. And try to see how this would fit in. So just wanted to kind of add that.
Great. Sorry, Lev, please continue.
Yeah, I'm very agree with this. I mean, the fact that a particular segment about to grow, this is not what should be like the indicator for us to move, because if my core lies within the world of education, okay, and I'm not a healthcare nor a fintech professional, so it's not that I'm not going to succeed. I think each one of us should come from a very value. Each one of us should be very value centric, and to bring his his truth. And there are a lot of technologies that could make this to turn this to a great company. So there's a lot of room for advancement in each and every segment. And I totally agree that this COVID situation actually changed everything with commuting, with education. So there are a lot of room for advancement, and I think each one of us to his core can contribute a lot, and the world is big. I mean, the innovation, great innovation, valuable innovation can come from each and every segment and sub-segment. So yes.
Absolutely. I think we have gotten a very clarity that these might be the top sectors, but that doesn't mean that there won't be any more upcoming who go on to actually change the world that we see right now. So I think let's come to our final segment that we have discussed now about funding the upcoming trends. Now we come down to the most important aspect, the elephant in the room. How can early age startups sustain themselves in an uncertain environment? So Deeksha, you tell me, what do you think will happen here? Will businesses be able to adapt to a new normal?
I don't think businesses have a choice but to adapt, right? And the ones that are going to make it far have already adapted, right? Because it's kind of been a year and a half since we've been, flushed into this entire situation. But Anjali, what I want to do is maybe highlight a few things or other insights that I think startup founders could take and actually apply that in their businesses, right? One is try and keep your business model as lean as possible, right? And today it's possible more than ever, right? I mean, you no longer need a physical working space. You no longer need to just hire people who are in the vicinity, right? There's the rise of the gig economy, there's the rise of virtual working spaces. So as a whole, the costs that you needed to run to incur a business in the past couple of years have drastically reduced, right? So if as a startup, you're not leveraging that, you're actually going behind, right? So keep your business model super lean. Secondly, I think there's a lot of tech out there available that will help you automate a lot of processes for which you might have to hire a team, right? Like whether it's just simple productivity, whether it's customer service, whether it's accounting, and these were all things where I think a decade back you had to hire a team and pay for the cost of that team. Today you have enterprise softwares, you have smaller startups that are actually offering these as SaaS tech solutions. So I think as an entrepreneur, you want to go out there, you want to go on places like Product Hunt, you want to go on TechCrunch and figure out what tools can I use to actually reduce even the operations of my business. The third is, I think Lev pointed this out, that please be ready to pivot your business model. You have to be ready to change. You have to be an agile model, right? And that's the advantage that startups have over bigger corporates, right? For a bigger, larger corporate to actually, induce change is very tough just because of how complicated the organization structure is. For startups, it's the opposite, right? So that's like that whole David and Goliath story. So startups need to start leveraging the fact that, they are agile and they can adapt. I think the next is take risks. Opportunity is the flip side of adversity, right? And as a startup today, if you think you have the idea, you have the execution ability, this is literally the best time to start a business, right? Because most people will not, because they think it's an uncertain business environment. But some of the best innovations come out of, the most slump times. And then, of course, I think learn from the ecosystem. We're so lucky here to have kind of, been on a panel or be connected with people, not only in our city, but, across the country. And you have so many amazing minds who you can reach out to, who you can listen to. So, be out there, learn from the ecosystem. And, I think that's a great way to kind of figure out how to sustain in uncertain times like these.
Absolutely. I think you have summed up the entire process which any entrepreneur needs to take in. Anything else any other panelists would like to add in here before we go ahead to the live questions?
Yeah. Okay.
Yes.
Yeah.
Okay.
Yeah, thank you. Yes, I would like to lead actually very little here. I think, as was mentioned, yes, we should work much smarter than we used to work until now, and the lean model it's definitely there to absorb. This is, by the way, this is one of the tools to make a sustainable, and profitable management at the core. One of the things to look after is to widening your network, because there are a lot of resources out there which are available to make you work smarter and stay in this lean position when you don't need actually to build a huge company. And this is the biggest advantage each startup has over big other companies, the position to disrupt. You don't, for most today you don't need offices, fancy offices. Most of the work could be done from home. And of course, some may say that, okay, but high technological deep tech companies, they should have like laboratories, they should have equipment. Everything is solvable. Believe me, I'm dealing hands-on with 2 deep tech companies, and whatever the equipment you need to find could be found, and you don't really need to go for this. And by the way, this is not what your investors are looking for, to actually to invest into very, very fancy facilities. A lot of things might be done to a very like agile approach, and you can stay lean and small but smart and very, very profitable. So once again, widen your network of stakeholders. Okay, connect yourself in any possible way to like-minded people, to other companies that will give you this room for expansion and experience, and even an access to some lab space where you can work perhaps, and this is something that will cost you maybe much less. So yes, widen your network.
Krishnakumar, you wanted to add on to this?
Yeah, coming to, I think, sustainability, I would take from where Lev said about pivoting, and would like to share, which is a story of PPE kits in India, because one of my startup which I mentor has pivoted into it. They like. It was manufacturing jeans before COVID happened, and because of COVID, because jeans don't fall in essential services or products, they had to shut down the factories that they had. They had in fact 3 factories, and the opportunity was in front of them. Like COVID, when it happened, PPE kits, there was not a single manufacturer in India, and that opportunity was seen by the garment manufacturing community in India, and one of them was my startup that I mentor. And we latched onto it, and in fact, within no time, India has adopted. In fact, the garment manufacturing community has adopted to this new challenge and started manufacturing PPE kits. And in September, they started in, I would say, April or May, because May was the month last year when they started pivoting to manufacturing PPE kits, and by September, India has become the 2nd largest manufacturing hub in the whole world after China in terms of manufacturing PPE kits. So looking at the unpopular Chinese status, India became the preferred sourcing country for PPE kits. So see the value or importance of pivoting. So otherwise, the manufacturing setup would have simply shut down, and he had to shut down his business, right? So instead, he took the challenge, took the opportunity, and pivoted. And we became one of the few leading manufacturers in PPE kit segment. So I think that's where I think startups founders should focus. And like Deeksha said, if you are lean and nimble and agile, you can adapt to a situation. And as Lev said, today it's COVID, tomorrow it can be any other challenge that we will be facing. So the challenges will always be there in different ways. So it need not be COVID, but it's somebody has called it a VUCA world, so volatile, uncertain, complex, and ambiguous. So this is going to be an inherent thing for any business. So whether it is COVID or the other challenge, so business has to face uncertainties, and they have to always be ready to adapt and even change their business to stay, be there in the business. So that's the point I would like to make. Thanks.
Anjali, I would want to kind of just add one thing. Am I audible?
Yes, please.
Yeah. Okay. So
Yes, you are.
everything has been said, resilience, agile, everything. Just one tip that I would want to give to the startup founders, not just for the COVID times, but all the uncertain times when the startups or the organizations go through a rough time. What happens is the first thing is firing of employees. Yeah. So I would recommend the startup founders to actually not do this, because these are the employees, which has been the early believers in your startup when nobody believed in you, right? So I think instead of that, it's better to actually have a communication wherein you can take a cut, or you can actually give ESOPs at that point in time in lieu of salary. So there are a lot of constructive and innovative methods how you can retain your employees and not make them vulnerable ki, okay, now the times have changed today, I'm not able to afford you, so I'm letting you go. So it's a very harsh step on any any startup founder to take, because the leaving employee will never say good about you then, because he believed in you when no one did, and now you are kind of letting them go with a very bad taste in the mouth. So that's one tip that I would really give from my heart to all the startup founders. Please don't let your valuable employees go, because the moment the times are back again, you will again do the entire exercising of hiring, training, and there's a whole lot of money that will get drained again, right? So I think this is one thing that everyone should keep in mind, whether it's a startup, whether it is COVID, whether it is any other uncertain time. Yeah.
Absolutely. I'm so happy that my panels is like this, that I don't need to go each and every one. You all have contributed it so well, right? So the inherent nature of doing business remains the same, from pitching the idea, pre-money valuation, scalability, investment, and eventually path to profitability. It all together prepares the entrepreneur to put the best foot forward and ensure a successful fundraise. On that note, I would like to open the audience floor for the questions. I will be taking the questions from the chat box. There are some curated, but there is one more announcement, that we had said that there will be a form coming up in the chat box, which will give you a special offer and also feedback form. So please make sure all the audience out there fill that form and don't miss out a golden opportunity. After the Q&A, I will let you know what is it all about. Again, so I think I'll start with the very first question, which came literally at the beginning by Mr. Sudhanshu Srivastav. The question is for all the panelists here, is that if for a startup in a year, one should focus on EBITDA positive or profits for a long-term vision of creating a loyal and ardent customer base, top line and trustworthiness with customers. I'll repeat, a startup in in 1 year should focus either on the EBITDA positive, profits for a long-term vision of creating a loyal and ardent customer base, top line and trustworthiness with customers. What will it be? Any one of the panelists can answer this question.
I can take this, Anjali. Yeah. So see, in the early stage, what I think is that you also don't know whether you'll be able to go EBITDA positive, how your product is going to be behaving in the market. You also don't know about it, right? So in the beginning, you should always concentrate on unit economics. Unit economics is selling one product, you're not losing money on that selling of the product, right? So I think first and foremost is unit economics, having it positive and not burning money in actually selling your product, right? EBITDA positive is a beyond story from in an early stage, as the question asked. The second thing is that how well and how scalable your model is. So I think the second most important thing is scalability, whether you'll be able to scale it or not, whether what problem you're solving, there are enough takers in the market or not, whether you have done your customer profiling in the right way or not, So second is you concentrate on the takers of your product or your business. And then once you have a proven model and you have enough customers, and then your Excel sheet, which we call as a business plan, starts looking promising. That's when you can actually look at an EBITDA positive P&L. But right now, in the beginning, you won't even know how your product is going to be behaving. So I think unit economics is something which you should put right.
Great, great. So I think now I come to the second question. This is by the founder of Vidam Agrotech, Meghna Singh. Is that how should we go about the ESOP distribution for early age startups or pre-seed funding, as there is no data to value the company at that time? This question is again open to any panelist. Krishnakumar, would you like to pitch in here for this one?
I think Sonal should take it.
Sure.
I think all the questions are coming to you, Sonal.
It's not like
Yeah.
that. Yeah. So I think, yeah, ESOPs is very, very important aspect in the beginning of your startup, because that's the time when you have to really leverage good people, and these are the early believers. So 10 to 15% ESOP pool is something that every startup should have. There has to be a founder's equity, and then there's a 10 to 15% of ESOP pool that you should have. And also, if you could have a 5% advisory pool, right? Because I'm talking from the young founders perspective. These are the people who really don't have lot of experience. So people like Krishna Kumar and me, we can actually sit on their advisory pool and a mentor, whether it can be a pro bono or all these things, doesn't matter, and they can give them expert advice, and also create value chain for their propositions. And the employees that come and believe early in the ecosystem should be given ESOPs. There is no valuation that is required for giving a ESOP. So probably, it all depends upon what kind of.
I think there is some network problem. Just I think there were some network issues from Sonal's side.
I can add on top of this, Anjali.
Yes,
I think it's pretty much common to allocate, as said by the way, 10 to 15%. Those metrics are perfectly fine. The important things about the allocation these percentages to ESOP is the further flexibility. Because for instance, there's a startup and a few co-founders, and the initial team, and probably this team can take you further up until a certain point, and later on there's no surprise that you'll need to bring much more human capital, okay, to your team. Okay, so when you have this 10 to 15% allocation to ESOP, it gives you a lot of flexibility to manage motivation, okay, by bringing a new human capital that can potentially sometimes serve as high positions as a CEO. Okay, the co-founder should maybe the guy is coming from the tech space. It's not necessarily the right manager, the right CEO to lead you towards scalability. But by the way, okay, to put yourself in in other geographical markets. So when you have enough room to motivate those people, it could be certainly done. So yes, don't afraid. And I know that sometimes from the perspective of co-founders, okay, why should we put so much ESOP? And don't afraid. I mean, people who you will give them a few percentages of your company, and in the end of the day, those are the people who will take you much farther than you think. So the economics of 10 to 15, this is something that is solid and pretty much common today, and don't afraid to do that. I mean, it's a good thing. Thank you.
nice.
Sorry, Anjali,
So,
I lost the connection in between.
No worries. You can thank Lev because he took over and
Okay,
helped
great,
you
thanks.
answer your question.
Yeah, it was a little tango, so it's okay.
Great, great. So I'll move on to the next question. This is by Ms. Sharmila Badesara, who's a co-founder of Auto Jagat. So she asked that in this COVID period, what does investors think about early age automotive startups, except the vehicle in terms of investment? Deeksha, would you like to take this?
Is it except e-vehicles or
Yeah, except e-vehicles. Yeah, so it's about early age automotive startups, but not the e-vehicles one.
See, again, I think one thing that COVID has done is it's made sure that, you know, we think of our businesses from a more sustainable angle, right? And I think that would apply to travel. We are seeing actually EV take a lot of, you know, limelight in terms of funding and also just awareness, right? Whether it's, you know, startups like Blue Smart Mobility, or whether it's, you know, startups that are actually going into manufacturing of EVs. But if you're doing something that is non-EV related, it still has to have a very, very valuable moat, right? Like, are you somewhere reducing the dependence on, you know, fossil fuels? Maybe you're coming up with certain, you know, agile parts for a particular vehicle, so on and so forth. So the innovation should be here to stay. And it should, in some or the other way, you know, reduce the load on the environment, right? Because I feel with battery-driven cars and stuff like that, this is where that sector is going. So, Sharmila, I don't have much, you know, light on what you're building and what your venture is, but you know, if you need more advice, happy to kind of connect with you one-on-one. And I'll just share an example here. Pune is a manufacturing hub of, you know, a lot of auto parts, auto industry. And a very good friend of mine, also a stellar entrepreneur, he had a factory that would, you know, manufacture steel parts. And of course, he would kind of sell it to your Tata Motors and larger, you know, larger auto houses. When COVID hit, you know, he's like, what do I do? My industry was completely at a standstill. But at the same time, there was an increasing demand for hospital beds, you know, all those steel frames. So he literally just pivoted, you know, his industry into manufacturing for that. And of course, now, you know, it's kind of half and half. Half is catering to the automotive sector and half is catering to COVID. So whenever you're doing anything, you know, in a high duty, in a heavy investment sector, I think after COVID, you want to think about what are some of the other sectors that you could probably service, right? So that's just a little bit of a piece of information.
Great. So I think you know where to reach out to. You can directly connect with Deeksha on LinkedIn. And otherwise, you can also get back to Accelarize and Voila Experts, and we'll help you to get in touch with her. Yeah. So in the interest of time, I'll take one last question. In fact, it was asked by two people. So that we will take it, and it is directed to you, Lev and krishnakumar. So I'll ask that. It is by Harshit Kohli. He's an engineering manager at Innovator, and Sudhanshu Srivastava, who's a CEO of Holborn Wells India Private Limited. So the question is that they do agree that the profitability is important, but how come we see a lot of startups raising a ton of money but not being profitable? That's part one. And second is that there is a segment of IVD which they say that there are a lot of good players. In spite of being 4 to 5 years of operations, their bottom line is still not impressive, but keeps on getting series of investment. So I'll start with you, Krishna Kumar here, and then Lev.
Yeah, coming to, I would say, without profitability, people getting funded. I have my own thought process because I don't come from that particular school of thought. Rather, I won't be able to give answer of why people are putting money in loss-making company. That is one thing. Leo mentioned one point. Most of them are going IPO way. And now there will be a real test of these business models, because when you are a private player, valuation is what you can yourself drive. But when it comes to real valuation, when you go public, a lot of things will change, and really going IPO way will test the business model. And I would love to wait for these some of the upcoming IPOs to come and see where it goes from there, because I believe that as an investor, at least I will put in money if the company is profitable. Valuation is secondary, because once I put in a profitable venture, I can always look at the scaling up and getting revenues, and certainly at getting the startup at a bigger valuation and then exit. So I would still go for the profitable way. So I don't know why people are putting, because at least it doesn't fit in my philosophy of things. So that's the answer that I would give to that particular phenomena. Second question, I think Lev, you can take.
Okay, I don't know if it's the second question or the first one, but yeah, it's a very interesting topic, and actually, you know, there's no simple way to answer it, because you know there's the game we are all playing, and there is, you know, what we really, you know, some of us really believe. So I'll start from what I'm personally believe in, and this is actually aligned with Krishna, that I still rather prefer to go with companies who are profitable, because you know, we are not experts in each and every field, okay? And if I need to judge a company or to examine a potential investment, and you know, I'm not I do know a lot about AI, IoT, other you know, digital transformation technologies, but you know, I'm not a very deep expert in each and in every. So I have like very little. I need to observe certain tools that will give me the right perspective towards a company, whether it's a good investment or not. So in this regard, when I see a profitable company, it's a good sign. Okay, it's a good sign of a proper management. And with this company, I know that if, and no, it's not a question of if, when the tough times will come, they will have much more room to exercise pivoting, okay, and do whatever is needed to survive. Now let's go to what is happening, and this is actually the core of this question. Yes, there are still a lot of investors that prefer to continue in investing in companies which basically losing money. Now, each and every situation must be judged differently, because you know, we should ask ourselves, what are these companies? In biotech and healthcare segments, a lot of companies, it takes them a lot of years to come to a place where they're commercial. Okay, so yes, a lot of initial years are basically a place where they burn a lot of money for R&D. Okay, but what is most important here is that we need to go and to understand how investors think, and I'm mainly speaking about VCs. VCs, they have a huge obligation towards their LPs, okay, and they need to, you know, at the basic, to at least to return, you know, the you know, to return the fund. Let's go for I don't know, 100 million fund, okay? So at the basic, they need to return this money they took from their LPs. So potentially, if they have, let's say, I don't know, at around like 15 to 20 companies, and you know, you cannot argue with statistics, only few, actually, if you have these metrics of about up to 20 companies, 2, maybe 3 companies will succeed well. So they're calculating their risks through this prism of, okay, we need at least you know, 1 or 2 companies to succeed in a way that it will allow us to actually to bring back the at least the fund level, okay, without all the earnings besides. And you know, some of the rest of the companies will succeed in you know, in some smaller way. Other will bankrupt or go out of business, or become like you know, good companies, but not necessarily a VC scalable kind of company. So from this perspective, sometimes for VCs, it's the only way to continue fueling these companies with extra rounds, where they know that actually this company is losing money, they are burning this capital. But for these investors, it's a matter of actually eliminating those companies from their portfolio, or giving them some more chance to survive, one, and to actually to boost the valuation of these companies, because this exercising of bringing more and more capital, in the end of the day, you want it or not, and this is the game we're all playing, this is what actually boosts their valuation, okay? And this is actually versus of of being a profitable company. So me personally, I don't think this is, I mean, the right way, but this is a game all of us or some of us are playing, and there is a lot of room for improvement even in this practice. So for a question of how come some companies are doing great of having these A, B, C, D, Z rounds with huge numbers where they are basically losing money. And we know, because in the end of the day, those companies are coming, or today a lot of companies are coming to, as I said, to IPO, and we know 93% of them are losing money. Yeah, but this is this is the game, okay? And there's a lot of, you know, to disrupt even within this scope, a lot of improvement. But this is not the way I propose for companies to run themselves. When you're
Anjali,
profitable,
I would just want to kind of give a perspective, my personal perspective of what I've understood from the startup ecosystem, why these companies in the today's era are being funded in spite of burning a lot of money, right? So what happens, these are all technology enabled companies, right? So each and every company that we talk about, which has been burning a lot of money, but still raising, you know, series A, series B, and series E, F, G. So I have a small perspective over here. These are all technology enabled companies, and technology is actually enabling a high scalability, right? So what happens, what ITC or a Taj did in say 20-30 years, Oyo could do it in 3-4-5 years. So that is a difference, right? So I'm not talking about valuation over here, but I'm just giving you a synopsis or the logic of why these companies are getting funded, right? So and that's why they're called as startups. Startups is actually an ability for any business, you know, you can actually name it as a business or a startup. It's an ability in itself to scale 100, 200,000 times than your contemporaries, which may have taken, you know, decades and long era to come to a value or a valuation of what they are today. And technology is the key over here. So you would not see any non-technology companies going, you know, so leaps and bounds, because what happens once there is a desired level of scalability reached, you just have to plug and play the technology, and the entire money has been burnt to actually scale that up. When that desired scalability is reached, you can actually, you know, you can actually do a overheads cutting, and then that's the time when you can actually become profitable also. So that's a little perspective of what I have seen in the ecosystem.
I agree. I agree. The perspective of time here is very important, and this is one of the another reasons that those companies practicing this over and over fundraising processes and bring a lot of money, because once again, from the perspective of their investors and themselves, yes, those periods should be shortened, and the only way to shorten those processes is to bring more and more and more and more money. This is the game, whether you like it or not.
I would love to give one example, like in this particular, you know, I would love to give an example of Amazon, because Amazon is another, you know, e-commerce, you know, as they started, and their e-commerce venture was a loss-making venture till the time they came up with AWS. You know, when AWS came, they could turn around and you know, draw the profits out of the scale that they achieved through the e-commerce venture. So now AWS is rather pumping in money into the e-commerce venture, but the e-commerce venture is itself a business model where it's a loss-making game, because you are working on commission, not on the product margin. But then they have used their customer base to get AWS clients, and now they have turned around. So, but how many startups can do that is a question mark that always will be there. So again, my thing will be focus on profitability. That's the best way to safeguard your, operations, whether it is COVID or otherwise.
Absolutely. I think this
Economies of
question
scale, as they
itself,
say.
yeah, economies
Yeah.
of scale. And I think this
Yeah.
question itself requires another panel, right? An entire panel discussion, because this is a very important question and everybody's very curious about it. In fact, there is a lot of buzz on the chat room about this and a little more clarity. But I think we'll take this to LinkedIn. And there are also other pressing more questions. So I would request all the participants who are there, if you have any question for our panelists or otherwise, just post it on your profile, tag Accelarize and Voila.Expert, and our experts will get in touch with you within 24 hours and answer your questions. So I think that will really help you out here.
Yeah, sure.
Over to you, Abhishek.
Yeah, great. So it was a great session indeed. I was actually listening out there, right? And I would like to thank all the panelists. But before we get away from this, I would like to ask a really quick bite from Sonal and Deeksha, because there are a lot of women entrepreneurs. Sorry, Deeksha, there are a lot of founders, basically those who are there, right? Those who are actually female. So, and Deeksha is very much particular about women empowerment and entrepreneurs, those who are actually coming from that league itself. So what will be your message? Because today's sponsor of this session is basically, I would say, a lady itself. Her name is Meghna Singh. She is the founder of Vedam Agrotech. So I would like, and Sharmila is also there. She is another lady who is really doing a good job. I had one-to-one chat with Sharmila on his business model and all. So what will be your message basically for these founders itself? Deeksha, over to you.
Yeah, so two quick things. I think if you are a woman and you're a founder today, it's like a double winning, ticket that you have. So please leverage it, and please be out there, talk about what you do, take every opportunity that you have to network. I think one of the places where I see women not living up, everywhere else I feel they're outperforming, but one place is networking. So please make sure that you give that a very, very high priority. There are some amazing networks out there. I think Abhishek's and Anjali's network is great. I run a network called Encubay. We do a lot of, sessions for women founders and investors. So would love to have any of you there. And of course, lastly, don't ever doubt yourself. I think, and this goes for any founder, right? The fact that you've chosen to be an entrepreneur is probably the bravest decision. So you've already taken that. So I think the journey should just be onward and upward.
Great. So Sonal, what is your take actually, and what will be your final remark on this?
Yeah, I think I strongly believe that women can be great founders, entrepreneurs, because as I said earlier also, that there is some natural instinct in a woman which makes her successful, and we've seen it everywhere. And today, even the boardrooms are mandated with women, women leaders and women independent directors. So that's one very good move by the government. And here I would just kind of talk about the government initiatives also. Most of the women, they don't know that there's a lot of incentive from the government which they can avail. So go out, search for that. And entrepreneurship is a beautiful journey. I think be a job giver rather than a job seeker. It gives you a lot of satisfaction. Being a mother by nature, I think when you are nurturing a great team under you and you're paying them salaries, it gives you a lot of sense of satisfaction. So I think it's a beautiful thing to be try to become, more as instead of a job seeker, get into entrepreneurship, give jobs to more women, because one women leader will, give opportunities to 100 women. That's the kind of power. So one is to not one is one is 1 + 1 is not 2, it is actually 11. So just
Right.
go and do that, and I'm sure every woman who gets into entrepreneurship will be successful.
Great. So I would like to thank in the end all the attendees, and so much thanks to all the panelists out there. Anjali from Voila, Deeksha from Encubay, and Sonal from Meteor Ventures, krishnakumar from mPower Solutions, and Lev from Kataki Ventures. And I hope that we are on a mission basically to help the startup ecosystem from India and overseas and global, right? So we will keep working these kind of sessions to help more and more entrepreneurs out there. So that's it from Accelarize Networks from today for today, and we hope we will keep organizing these kind of sessions which are informative, which are actually give you a boost basically, right, to continue your entrepreneurship journey, right? Thank you guys. Thanks for joining us. We will meet you soon. Thank you. Take care.
Thank
I
you
Thank you
so
also
very
much.
much.
add a
Bye
bit
bye.
here.
Bye-bye.
Actually, I would like to add a bit here.
Yeah.
I'm extremely honored to be able to moderate such esteemed panelists. I think thank you will not be enough to all you panelists here. You have given a whole new perspective. There is certainly a lot that I'm taking away. And to our lovely audience members for participating and providing such great questions. Now I come to the last, which I had promised, that the form that you have received on the chat box, if you have filled it up, we will get in touch with you very, very soon. And if you have not, just download the form and sign it up. And if you're facing any issues filling up the form, all you can do is you just can, again, get in touch with Accelarize or Voila Experts. We will help you sort that out. Now, what do you get out of this? What you get is that there were different set of categories in the form. You have a chance to connect with the expert for a one-on-one exclusively on the Voila app for 30 minutes, a free session. Once you declare your category, we will get back to you and we'll give you that a golden opportunity for a 30-minute session. So all you have to do is download the app, fill the form, and we will reach out to you very, very soon. And for any other feedbacks or suggestions, or if you want us to organize one more panel or any other podcast in different issues, you can again reach out to Accelarize and Voila. All the email IDs and the links are also in the chat box, and you just have to type the name. We are available everywhere. That's it. Till then, take care, stay safe. We will see you all on the other side. Thank you.
Thank you.
Thank you.
Thank you.
Bye.
Thanks.